Good evening, everybody. I was just telling Jim we try to make this short and sweet, but then I looked at all the charts I got for us to look at, so we're going to be here for a while. We're in what I consider the, I hate to use the word transition because that's being all screwed up. But we're in an area where we might be reversing or we might be basing. So we don't have anything concrete to go after, because it could come back up here and test the T-line and go through. That would be a reversal. Or as long as we're below the T-line, we have to assume we're still in a downtrend. So that makes it difficult. But I've found that if I stick with the truism that as long as you're below the T-line, you're still in a downtrend. And the same scenario for the NASDAQ. Now, this was a gut-wrenching day if you had puts. And you can see what happened today. The NASDAQ gapped up. It traded most of the day above the T-line. And then on the close, it did our truism. It still closed below the T-line. Yeah, Brian, make sure up at the top of your screen you're on screen sharing, not slides. And so this makes our trend analysis, even though, good, Brian. Highest volume in the Qs the last 10 minutes, yes. But that still is relevant for telling you what's happening as far as investor sentiment. They weren't buying going into the close today. They were selling going into the close. Rob, yes. And if I were you, I'd just call in sick. All right, so watch what the, right now it's showing the Dow is going to be trading a little bit lower, but that's right now, remember. That doesn't mean a hill of beans until 7 minutes before the market opens. Now, I always come back to use the signals and patterns as your probability factor. You can see the scoop type pattern in relay. That's why we recommended that today. Same over here in MYOV. There's your, whoops. Out of here. Classic pattern. Fry pan bottom, J-hook pattern. And again, look where it did the J-hook. Doji, hammer, make this bigger again. Right smack dab off the 50. What do you think your probability factor is? You're heading up here, probably right to the top of that trend channel. Yeah, you do get a lot of volume there in the last, usually the last 20 minutes, because that's where people are making their decisions to either close out their positions for the day or. And a lot of times you'll get extra volume where somebody's doing a block trade and they've taken all day to accumulate somebody's position that wanted to buy 1 million shares of XYZ. And so all day they've been accumulating that position at different prices, and then they get done at the end of the day, then they'll report it that 1 million shares has been done, and it comes in the last few minutes versus during the day. Let's see, that was, and here's another one that had a, we recommended this one because of the kind of your bobble breakout. So here's one that I would put into the classification of, if you're a day trader, if this opens positive, doing a J-hook pattern, if it opens positive, what's the assumptions? That it's going to trade positive, probably the same magnitude as this day right here, which means they're breaking out through this level and telling you this J-hook bobble breakout is in progress. Whoa. It was difficult. Glad I started early. The email sent to me said no password required, yet I couldn't get in without one. I called your number listed, but it was changed. I had to search for a valid number and find one, and no one answered the phone or returned the call. So, Philip, what were you looking for to get in? Apparently, you're in. And yeah, you don't need to. It's a member's password on our Monday and Tuesday night sessions. Doji sandwich. Yes, looking for the Doji sandwich. There you go. Thank you, Marshall. And that's your classic pattern. There's your fry pan bottom, followed by a J-hook, and look where the J-hook started. Where do you think the next target's going to be? So these are just high probability trades. And for the day trader, if you see this setup and it opens positive, you can be buying immediately without hesitation. Because of the probabilities. I searched my past email file, the third password given to you in over a week. This worked. Okay. Okay, good. Glad you feel better, Philip. Yeah, you'll have a different password usually on Thursday nights because we usually have guest speakers, or because we let everybody in, we change the password for the night. And so if you're having any doubt about a password and you're already in here at the end of the day and you know there's a session that night, just ask, what's the password for tonight? Okay, that's a good chart. Your classic chart. Okay, let's take a look at a few that are performing. There's your fry pan bottom, J-hook pattern breakout. I think after hours it was trading up, but just a very simple process or trend analysis. You're at a fry pan bottom and you can recognize it. All you have to do is stay long as it stays above the T-line. Mullen started to come alive again. It looked like the, I did that wrong. Looked like the electric vehicle sector is coming back alive, and so you might keep an eye on this one if you like playing the small ones. And COGT, there's your 45-degree in progress. You could have a J-hook pattern, but at least a 45-degree. And that's usually based on this big breakout. The breakout tells you there's a brand new investor sentiment in this. Now you just watch to see what it does using your T-line. I would still be a buyer of this if it opens positive tomorrow. Once again, what do you got going on? A doji sandwich confirmation of a J-hook pattern. Okay, let's see. Tupperware. You can see what's happening. There's your your fry pan bottom setting up, with this being your kind of your dimple. But now it's in an uptrend. You could be buying this one, and once again, if you're buying it, you're going to be holding a little bit longer term, but the percentage move is going to be significant. If you're trading down here at the $7 range, and it looks like it could go up here, let's say to $10.50, that's a good 50% upside potential with something that you can recognize. Here's another strong setup. Your bullish flutter kicker signal. Notice how Valero gapped up today at the previous day's open. If this opens positive tomorrow, you buy immediately, because where do you think your first target is likely to be? Here at the 50s. If it doesn't stop there, your next target is the T-line. All right, so even in a mostly positive day, we recommended going short on this, because look what the psychology is on this type of day. The bulls are coming in, trying to take it up above the T-line, and then by the end of the day, they're selling it off. Did that just happen to Philippe? Yeah, we might have to help Philip. All right. So what's that tell you? The bears are still in control. We were going to short this if it opened lower. It opened, traded positive. It's still a very good short. Because where do you think? Oh, I hate when I do that. Which direction is this going? Obviously down. Rolling over again. Where do you think the first target is? Right there or right there? That's still a good short. We go short on Rumble. All right. Okay. Nothing wild about this one. It's just doing the same thing. That once they brought it back down below the T-line with a kicker type signal, the downtrend remains in progress. Look how it opened positive today. Might have said, up, I'm going to cover. Wait a minute. They're selling off. Whoop, they never started buying again after they started selling off. So that is why the graphics, the candlesticks, makes your decision process much easier. Because most people, if they looked at the numbers, oh, it's up $2, $3, $4. Not good if you're short. But the fact that you could see that once they opened it, it was creating a red candle tells you, yeah, that's Cracker Barrel. Tells you to stay short. And here is why it is important to know what a signal is and what a signal is not. Notice what this signal is right here. Anybody, what is that signal right there? There you go. Good. Now, why is that important? Even though it's a bullish day, why is it important that that's not a signal? Because if you just rationalize that the Japanese rice traders, over hundreds of years of watching the graphics and the signals, that if they gave this a signal and told us what it meant, then we'd look at it as a signal. The fact that this movement is not in the category of a candlestick reversal signal, that means it was a trick, Jace. That is not a signal. So when you look at that, and somebody says, well, could we be buying this? You always hear my answer that it's not a reversal signal. It has the probabilities of going up, but not anywhere close to the probability of a reversal signal. Again, on the basis that if this was something that the Japanese rice traders had observed and said it's got relevance, then we'd be looking at it as a signal. So the fact that this one, again, and the reason I'm pointing this out is because I had puts on this. And so the rationale was, all right, it's trading up here without a signal. So if it closes up here, yeah, I'll close it out. But the fact that it wasn't a signal, waited till the end of the day, and look what happened. There wasn't the buying pressure in there because there wasn't that high probability of a reversal signal. So that was the same scenario on Carvana. It started up, pulled back, so it didn't confirm the buy signal right here. Then it started up again. Same question. What signal is this right here? It's not a signal. So what happened today? After trading up positive, it closed back near the lower end of the trading range. So rhetorically, you can say, is this a very strong chart pattern? Obviously not. You go someplace else. I'll take a look. Now that is a signal, Jace. Yes, that is your doji spinning top, gap up, best friend, close above the T-line. So that does have some relevance. All right, the biggies like Tesla. There's your little bullish harami. Not quite an inverted hammer. The tail's not big enough. But you had a bullish harami gap up through the T-line. Now, what other pieces of evidence can you put on this one that this is a good, strong reversal? One, they gapped up and closed above the T-line. Two, they did it right about the same place they did a bullish signal before in the oversold area. Stochastics coming up. So what would be your trading strategy on this one? I want to see if they can come back up through today's high, or if the market opens positive and starts trading positive, yeah, it's confirming that this signal is working with kind of a double bottom. Now, this one was a squeaker. NVIDIA. Let's get rid of this. Not quite a bullish harami. Not really quite a signal. But they gapped it up strong today. Yeah, this one was a squeaker in trying to figure out what to do. Meaning, if you were in the puts and they gapped up and going positive, I'm thinking, man, this is a this is bad. But if it's already up here, what's the logical thing to do? Wait to see what it's going to do by the end of the day. Well, it's closed it right back here, right on the T-line. No, that's not an inverted hammer, Bert. Where does an inverted hammer occur? I'll help you. At the bottom of a trend. This is just because a formation looks like a signal, it doesn't necessarily mean it's a signal. It's just a formation. Now, what's this formation telling us? Telling us they were weak going into the close. So what's our final criteria? We better see it open positive, or if you're short or in the puts, it better open lower tomorrow. If it opens positive, that means the buyers are still there. That's when you close out your the puts. Now, if I recall correctly, I think I saw the price of this closed at 165.66. I think it's right now bidding at 165.01 and 165.50 or something lower. So if this opens lower, it means our downtrend remains in progress. Unfortunately, that means you have to sit through an agonizing day, or you close out the position, get ready to reestablish the position again. Apple, now that is a bullish harami. Does look like it opened at or above the previous day's open, closed there. So it is a bullish harami followed by a gap up. But we're also sitting right here at the T-line area. Same scenario. Oh, Philippe, no sound again. If everything opens lower, that means we haven't reversed. Amazon, same scenario. Bullish engulfing after a hammer signal, gap up. I think this big movement was, oh, let's see. Did it do that during the day? But same analysis. There's your doji rule. It's going to move in the direction how they open. And Netflix. Failed at the T-line. Look for your bearish J-hook pattern. NVIDIA is closing. Let me take a quick gander here. What am I looking for? This. Yeah, so it looks like it. Now, they've a couple of them. I don't think it did this big move to the downside. Oops. Ah. All right, so that's a little bit of evidence. Say they're keeping this below the T-line. So once again, have to see how this one opens tomorrow. We're on the wrong set of charts. Am I correct that there are very few actual solid reversal signals? Jace, there are 50 to 60 candlestick reversal signals. Now, only 12 are the ones that you're going to see working all the time. So remember what we need to see to confirm a reversal based upon our probabilities. you need to see a candlestick signal, reversal signal, and a close above the T-line. You're going to see a lot of times where you see reversal signals, but if they don't close above the T-line, so here's one where if I was ready to buy this one, it traded lower all day and closed up here, I'm getting ready to buy in positive trading. Open lower. I don't know. Beliefs having such problems. Java, we did. Carvana. Carvana was the example that you didn't really have a reversal signal in here. So that told you this probably isn't the strongest chart to be going after. And that was kind of illustrated in where it closed right near the low of the day. Okay. So here's a nice strong signal. Genko. Now, is this an aberration? Is that the right word? You got a best friend doji gap up, kind of a bullish flutter kicker right off the 50 through the T-line. What's your expectation? Wave 3. Now, is this a unusual situation? Well, that's where you can go and take a look at some of the others in that sector. Well, First Solar was trading positive. CSIQ was trading positive. So there now you can kind of assume, look, they were buying that sector, and Genko seemed to be the strongest one. So let's go after that one. Okay, thank you, Jay. DQ, nice J-hook pattern. Wouldn't quite put it in a fry pan bottom, but at least you know wave 1, wave 2, and wave 3 are probably going to be pretty much the same. All right, Brian. And quick. Now that's a classic pattern. There's your fry pan bottom. There's your wave 1. There's your pullback. There's a long-legged doji. So what would you expect on positive trading? Wave 1, wave 3 up into this range. Forge. There's kind of your bobble breakout. Coming off your Morningstar signal. Gap up through this level or this level. That implies there's more upside. Now this one you'll probably see on your recommended list tomorrow. Fat. We're still checking Jace. I will get with you tomorrow. That might have to be delayed because of some extenuating circumstances. So I'll get with you. How are you taught, or have you taught how, Andrew? Yep, we can teach right here. Which one were we looking at? I forget. Was it Forge? quick. A very sophisticated process. If we can see our J-hook pattern setting up, when we know wave 3 is going to be equal to wave 1, that's how we do it. That's about as sophisticated as you need to be. You can see the J-hook breaking out. Anticipate this move right here, wave 3, will be the same as wave 1. Now, will it be exact? No. But if we start getting to this same magnitude up here in wave 3, now we're just a little bit more conscious as far as watching to see what, see if there's some potential reversal signals forming. Let's see. That could be a wave 3 setup or a J-hook setup. I mean, you can see, recognize this. And once again, this would be an excellent trade because, oops, that's a red candle, a gap up. Look for, if it opens positive, there's your bullish flutter kicker signal. You're definitely going in this direction. You could be buying it immediately. Yeah, we did DQ. Let's see, I'm gonna. Okay, whoops, I didn't scroll fast enough. So the bottom of the J is wave 2, yes. So this is wave 1, this is wave 2, and now this is going into wave 3. And where is the confirmation? When it does break out through here. So you've got two places to enter. If you're buying right here, with the anticipation it's heading higher, you watch to see what it does here. If it fails here, obviously you have a double top. If it goes through, now you can calculate that's going to be your next price move. Okay, and here's another nice, oh, I did this too soon. The reason this is a good-looking chart is because of the inverted hammer. Now, the inverted hammer, again, is one of the 12 major signals. The reason I narrowed it down to 12 major signals is because if you go through chart after chart after chart, you're going to keep coming up with the 12 major signals 99.9% of the time. Now, the other ones do show up, but not often enough to make it something you really want to learn. Because even if you see one of the other signals, on the same day you see one of these signals, the 12 major signals, you still want to go with the one of the 12 major signals because they are the ones that are going to produce the highest probability of a reversal, number one, and number two, the strongest of the trades. So this one you'll see on the recommended list because you've got an inverted hammer signal right there. And your ultimate inverted hammer signal is obviously the gravestone doji. If it opens positive, this is something you want to write down or keep in your mind. If it opens positive after an inverted hammer signal in the oversold area, you've got a 95% probability or greater you're heading higher. Now, there's no, computer-generated statistics on that. This is just my observations after 30 years of using candlesticks, that anytime I see this, I want to be a buyer. And that is one of the day trade type setups that if you see an inverted hammer and you have it on your watch list and they open up positive the next day, It's going to go in this direction. Is it going to be a big move? Don't know. You just know that you got a high probability it's going in that direction. Home Depot. Yes, but it didn't confirm from the get-go. Notice as soon as it opened, it started trading lower. So now had this opened and started trading positive, yes, that would be confirming. So what, I guess the other side of that coin is, will everyone work? No, there's about 3 to 5% that don't work. And how do we know they don't work? Because they come back through this level. That tells you that inverted hammer didn't work. But something like this, inverted hammer, oversold condition, gaps up, starts trading positive, high probability you're going higher. I'm going to write down Home Depot to show as an example when we do inverted hammers. Okay, got to go faster here. We're going to be here until the cows come home. I probably had this in the wrong place, but the fact that they did kind of a little inverted hammer type signal and then open positive, that's confirming this J-hook pattern. And was this one? I would put that into the classification of an inverted hammer, at worst, a doji. But it gives you the same illustration. That's probably a good, what are the cows doing out so late? And same scenario here on United Health. Is this a real great looking chart? Not necessarily, except for this tells you there probably is going to be some force. Okay. KOD. Oh, what's that? All right, this is observe the obvious. Look where your hammer signal occurred in the oversold area, right smack dab at the 50, back up to the T line. Another one, you could be buying on positive trading immediately if it opens positive, giving you a doji sandwich, confirming your J-hook pattern. Humana. Yeah. And not as compelling, but it's probably a good chart, and you definitely want to see it get through this level. All right, so how do you improve if you see dozens and dozens of good charts? How do you improve your probabilities? You go with the ones that have observable support and resistance levels. Kind of your bobble breakout J-hook pattern. It's only a 79-cent stock, but percentage-wise, it could give you a good return. That's EPZM. Kind of the same scenario on WRAP because of the bobble breakout. SRNE because of the bobble breakout. So why does the bobble breakout work a little bit more effectively than just a straight up J-hook pattern? Because everybody can see what happened here. It resisted at the 200. Now it came back up. Everybody can see it's not resisting at the 200. We can see it's a bobble breakout, so we can be buying immediately. Everybody else is waiting to see, yeah, it's now up above the 200. Let's start jumping in. And Futu, this is more of a J-hook pattern being confirmed that the 200, wave 3 is probably going to go through the 200. All right. Lockheed, that's your best friend Morningstar signal. So if you're trading this with the best friend signal coming out of the oversold area, if it opens positive, if you're trading, you can be buying immediately because of the strength of this signal right here. UTHR, what's your J-hook pattern setup? A doji sandwich. You could be buying this one on positive trading with what expectation? Wave 1, wave 2, now a doji sandwich taking you back up above the T-line, breaking out through this level, going into wave 3. DVAX, again, observe the obvious. Right here at the 50, kind of a almost a bullish flutter kicker signal. I put it in that same classification. Wave 1, wave 2, look for wave 3. SAIC. Same scenario. A Morningstar signal, here's your hammer signal, close above the T-line, wave 1, wave 2, going into wave 3. Your scoop pattern, scoop pattern. Oh, we're recommending this one because of the scoop type pattern. Another one setting up is Denelli with your scoop type pattern. Now this doesn't look real exciting except for knowing what the results are on a scoop pattern. A strong price move breakout. There's your classic pattern. Fry pan bottom, J-hook pattern. Where do you think your next target was likely to be? At least up here to the 200. Now your strongest individual signal is your kicker signal. Opens here, closes here, gaps up above the previous day's open and goes the opposite direction. This one you definitely can be buying on positive trading tomorrow. The kicker signal illustrates clearly that the investor sentiment has been kicked in the opposite direction with great enthusiasm. Same scenario here on TRMD. A kicker signal, breakout, look for wave 3. And Fro, kicker signal right off the 200, right here at the 50. If this opens positive tomorrow, look for wave 3. All right. That's the bullish side. If you're short Facebook, Meta, you're still in a downtrend. Stay short. AMED is a bearish kicker signal. If this one opens weaker tomorrow, what's it telling you? This support level was gapped down through. Look for another move of, I don't know how big that move was. Wave 1, wave 2, starting wave 3. Yeah, you got scoop type indication, but usually a scoop, you will see a nice, you'll recognize that long handle. Now where am I? So here's the obvious. They couldn't get this to close above the T-line. This is bedded and body works. There was a bunch of those today. DBI bounced up, but look what happened. Failed at the T-line. It can still be shorted. That's designer brands. Uh-oh. Reference session info, empty session information. I have no idea what that means. So I'm going on to the next one with great vigor. SIG, same scenario. Look at your bearish kicker signal. So if you were short this today, that would have been a toughie to stay short. But as soon as you started seeing red, you would have held on to it. And that kicker signal tells us wave 1, wave 2, look for wave 3 to come at least to here, and then possibly down here. Whoops. Urban Outfitters, wave 3 to the downside. AZEK, nothing yet. If it breaks this level, look for a lot more downside. Oh, is it? PRG. Whoops. PRG. I don't know if this was the one I was looking for or not. But anyways, you can see after the gap down failure at this level, wave 3 is still in progress. Thank you, Frank. That's probably the one. And did I do SRNE? Why is it down there? Oh, okay. EH, there's your classic. Fry pan bottom, J hook. Where do you think your target is? Up here. If it comes up here, what do you got? You got about an 80% upside price move. Why was I doing it? Oh, bullish flutter kicker setup. If this opens positive, showing you the 50 is not acting as resistance, look for the T-line to be your next potential price move or target. Yes, it's the most, the most, yes, so you did have a trend kicker type signal. Now, if you bought it that day, when they're gapping it back down below the previous day's open, you close it immediately. Or if you were waiting to buy on positive trading, yes, it didn't occur. Now, when you saw this happening, that told you right at the 50, they're gapping it back down through the T-line. That's when you can start going short. But yes, that's the true answer. If you see a kicker and then a reverse kicker, get out of the trade immediately. If you were in it. AMBC. I don't know why I have this one on here. Unless it was trading back up after hours. But this was another example. If I had bought this one today because of the bullish flutter kicker signal, where was the logical place to tell us the bulls were not in control anymore? If it came back down through the open. So just think logically. If they open positive and start trading positive, what's that telling you? The bulls are in control. If they bring it back down through the open, that told us the bulls are in control, what's that telling you? The bulls aren't in control anymore. Close out the trade immediately. I have this one on here because I think somebody was asking the question, where would you be buying this today? And that's where in our day trading session we'll say, well, if this is where it opened, you could be buying here. Maybe you wouldn't be buying right here, but you would be buying right here. Maybe you wouldn't be buying here, but you could be buying here, because what are you obviously seeing? The fact that they're keeping it up above the T line. That's true, George. Yes. Whoops. Oh, that's the 10-minute chart. Well, see, they reversed it up here. So they took it up quick and then started bringing it back down. So if I had bought somewhere in here, probably as soon as it came back down through the T line, I'd say, oh, they're not buying this. Let's close it out and wait for a J-hook pattern. So I may have been ready to buy here if it had traded back positive. Okay. That's about all I've got for tonight. There are still lots of good trade setups. Right now, the pre-market futures are telling us the Dow is going to be down 123. But remember, that doesn't mean anything. It's where it is as we go into the open. ADI bullish Harami with best friend gap up. The Stochastics oversold. True, true. So what's your final criteria before going after it aggressively? Making sure they can get it up through the T-line. So what did they tell us today about the T-line? Came up, hit it, and started selling it off. Now the reason I point that out, tomorrow open T-line, well, that would be another gap up. Yeah, if it gapped up and started trading positive, that'd be a really strong price move. Okay, are there any general questions on candlestick analysis? All right, if not, Jim, go ahead and do the double line. And in 3.6 seconds, do the next double line. Myrna. Nothing wildly exciting. It's still caught sideways. Danny, there's nothing here that I'd get real excited about. Not until they can get back up through the 50. ET, that one has the potential of popping back up to the T-line on positive trading. But you definitely want to see it open positive tomorrow. Box. Nothing of any great consequence yet. If I was going to buy this run, I'd still wait for it to get above the T-line. Now, Mullen did Mullen did trade up above the T-line. That one I'd be more apt to be a buyer of on positive trading tomorrow. And data, what did I do? That one you can buy, again, on positive trading. Giving you the J-hook pattern. ATRA, kind of your cup and handle. Another one you could be buying on positive trading. Yeah, buy that one on strength. HGEN, this one needs to get out through this level. Make sure your volume is good. This one, another classic pattern. If you're long, stay long. If you're now thinking of going long, wait for it to get up through the 200. That's probably where everybody else is watching. PBF, a bullish flutter kicker setup. Buy on positive trading. IMPE, you could buy this one on positive trading because the prospect of this one is a column reversal. Meaning if they start coming after this, they could take it all the way back up, giving you a high probability, big profitable trade. Whoops. J-hook pattern, classic, stay long. Now, I wouldn't want to see it close back below the halfway point of this candle, which would probably get you pretty close to the T-line. You definitely want to see this one stay positive. AMGN, bullish engulfing, confirmation, buy on strength. We did this one. It's probably going to be recommended tomorrow because of the kicker signal. Futu, poo-poo, wicked Futu. You could buy this one expecting a J-hook pattern. Marcus, if you're short, stay short. That's about the best you can do on that one. AMAT. If you were short, I would have covered the short today because of the Morningstar signal, but I wouldn't be going long. EBWI we did. Whoops. EBWI. Stay short. You could go short if you want to, expecting it to come down to the bottom of the channel. Denali we did. That one is a scoop pattern. You could buy this one on positive trading. KOD also is a good-looking chart. With your pullback to the T-line, I don't know if that was a I think I got that one right. Yeah. You still have to run the lap. That's right. Now, Jay's right. You do it wrong, that means everybody's having to sit here getting through that wrong one. That means you have to put your tennis shoes on and run one lap around the house. I like to combine candles with other systems like Mark Chaikin. Obviously, Magic, that's exactly the point. If you've got somebody's trading style that you like, you can get better confirmation by applying candlestick signals to what they're recommending. That's an ugly chart. You can see where it kept failing right up here. JB, I would be, if you want to, you could be shorting that one, but that's really not a real dynamic chart. All right, we're probably going to, excuse me, see this one on the recommended list tomorrow. You might see Lockheed on it. And, whoops. Let's see, what was I typing? URN. The kicker signal on this one. Oh, okay. Is that what's happening? All right. Apparently, Fun Rick Bear stick sandwich. Fun. There was quite a few like that. Yes. There was probably about at least a dozen of these I found tonight. So you could be shorting this one on weakness. You could be shorting this one on weakness. Definitely would like to see it get back below this level. DQ, J-hook pattern. Not quite a classic, but at least you can identify wave 1, wave 2, going into wave 3. All right, everybody, watch to see how the market opens tomorrow. Right now it's showing it's trading down 100 points on the Dow. So we still have to contend with getting up through the T-line. So with that, everybody have a good evening. We will see you bright and early in the chat rooms tomorrow. We'll see you then.